So, as I predicted, as I talk about the value of real estate investing, when you buy an income property, you're not really buying what you think, right? You're buying multiple components, at least two major components: one, the land, and the other, the structure, the house or the apartment complex sitting on that land. And as I've said, I like to invest in packaged commodities, but when they're put into the real estate wrapper, they take on very special characteristics, don't they? They take on all those ideal, remember that acronym IDEAL, IDEAL, components that make an income property investment. And that just becomes a beautiful thing. But one of the commodities, not just the glass, the steel, the lumber, the concrete, the petroleum products, the copper wire, etc. Not just that. One of the very important commodities, of course, is what? It's labor, the most expensive commodity of them all, the most expensive commodity of them all. And by the way, when I was at lunch today in Sacramento with my aunt and my cousin, my real estate mogul aunt, we were at a restaurant for lunch today. The food was excellent, and we're at this nice little restaurant. And once again, I was reminded of the real inflation rate, the one that isn't measured, right? So a little tangent here for a moment, but I think you'll be with me on this. So do you notice how almost everything nowadays is self-service? The food prices go up, but the do-it-yourself component, the fact that you're not getting served. I mean, have you noticed that you go into these stores anymore and they're like ghost towns? You can't find anybody to direct you or answer a question in a store anymore. There's no people. Everything's self-service. Yet no one has calculated that in to the real price of something. Look, to adjust for the inflation rate, they make the bag of potato chips smaller. Maybe they raise the price too, but you're getting less. You don't have a travel agent anymore. You're managing your own travel, right? So on and so forth. Everything is self-service, not considered. Okay, so let's look at multifamily development, apartment buildings. I've got an article here on TREP, TREPP, saying increasing labor cost is squeezing the multifamily development pipeline. Now, as you know, the rental market has become somewhat saturated in the multifamily apartment area. However, this is not true in the lower end rental properties. Rental demand is still quite high, very healthy market for landlords, tough market with constrained supply for tenants in the vast majority of cases. And then in the overall for sale market of properties, the higher end properties and the higher end markets, that compose about 75% of the Case-Shiller index, those are really showing signs of weakness. I mean, times they are a-changin', okay? There's no question about it. But you've got to peel back the onion. You've got to do segmentation of markets, of property types, and so forth to really know what's going on, because these macro statements, of course, are just way too generic and way too general. But in this article about labor, I mean, just look at what is going on here. And this is a very important commodity as part of the cost of a property. So this impacts single-family homeowners, multifamily homeowners, or apartment owners, anybody in the field. And it's good for you if you already own, but it shows how this will drive up cost and continue to drive up cost. So check this out, okay? The sector here, which includes building construction, heavy engineering, civil engineering, and specialty trades, all of the people that build a house or an apartment complex, right, had 7.3 million workers as of October. 7.3 million people working in that field. That number was up about 30,000 from the month before, right? And it's near the pre-recession peak of 7.5 million. A lot of people in these trades, right? No question about it. Although the low unemployment rate and increasing wage growth are indicators of a healthy and growing economy, apartment developers, now here's what I was alluding to earlier, apartment developers are getting pinched as strong demand for workers continues to outpace the supply of workers. But look at this. They're starting to see a real oversupply in this marketplace. Thankfully, most of us listening now, listen, I own 2 apartment buildings. One's a big complex and one's a little building, right? And the rest of my portfolio is single-family homes and a mobile home park. That's what I own. And most of you listening are pretty much single-family home investors. And I was just a single-family home investor for many, many years, the vast majority of my investing career, from age 20 until, maybe 6-7 years ago, right? Now we're seeing an oversupply in this market, right? Because you've seen all of these apartments constructed. They've added about 260,000 units, apartment units, to the country's inventory last year, right? And about another 255,000 units, almost the same number, will be added by the end of 2018. So this supply is getting dangerous, and it's going to move in favor of tenants. It's not going to be good for apartment owners. Now, the vast majority of this, when they talk about these statistics, are institutional apartment buildings, right? They're big institutional apartment owners. They might be a high-rise, they might be a garden-style apartment building with, 2, 3, 4 stories, stick-built type of thing. So the point is, oversupply definitely upon us in the apartment community. Thankfully, this doesn't really matter too much to us in the single-family home world. Yeah, around the margins, we might lose a tenant or two occasionally, but it's pretty rare. If you've got someone with kids and so forth, they want to live in a single-family home. So that's the vast majority of what we do as investors and what most of you are listening for. But if you're in the apartment world, be careful. Now, most people listening are, not in the institutional Class A type apartment stuff that has been just overbuilt or is on the verge of being very overbuilt. You're in the Class B and C stuff, the stuff that you can buy, get good prices on, and get good rates of return, good cap rates, and so forth, okay?